What's up? What's up? All right, perfect. So for those of y'all that's on here, one thing I'm gonna oh my bad, you don't have to unmute. You do not have to unmute. One thing I'm gonna ask is to make sure you have let's see, make sure you have a notebook ready. You have a pen and you have something because everything I'm gonna go over is going to be very important, and I want to make sure that everybody has it. So today we're going to go over the basics of Forex. My goal is to help you understand all the questions, everything that you have about trading, because there's a lot of miscommunications and a lot of misunderstandings about trading. And I honestly feel like this would be the perfect way to knock them all out. So you guys are ready. Can you guys drop a one in the chat or just say I'm ready, just so I know that you're ready and I can continue, because we're going to go from knowing absolutely nothing about Forex to knowing the basics. All right. So now on a scale of 1 to 10, I want you to rate yourself. How well do you feel like you understand do you know what Forex is? That's the real question. Like, do you know what the markets are? Do you understand how to trade in them? Do you understand the lot sizes? And now you could literally say 0 out of 10, or even zero. Well, we'll just go to 5. You could say 0 out of 5. Okay, 2 out of 10. All right, perfect. So my goal is to at least get you to a 7. And by that, we're gonna pretty much go over what is the foreign exchange market. Okay, all right, we got a 5. So I'm on Instagram Live also. So we got a 2, we got a 5. All right, that's perfect. That's perfect. My goal is to get you to a 7. And to me, what is a 7? You'll be able to say, okay, what is a foreign exchange market? What is it? How does it work? Who participates in the market? If I wanted to act in the market, how do I act in it? If I look at a chart, can I even tell just on the basic fat matter? Is the market, does it look like it's going up? Does it look like it's going down? And if I want to actually take it further and take trades, what access and what alleyways can I go to get that done? So it's nothing too crazy, but if you're lost on Instagram, write it in the thing, write a comment. If you're lost on Zoom, just write it. And then you can always message me or shoot me a message. So without further ado, let's get it started. So first, we're really going to go over what is a candlestick. So for those that's on Instagram, you'd want to pretty much join the Zoom so you could see what a candlestick is. But I'm going to explain it to the best of my ability. So for those of y'all that are listening on Instagram, you're still able to see and understand what I'm talking about. Because what we're going to do is we're going to go from here. I'm going to show you an example on here, and then I'm going to go on a chart. So we're going to take baby steps, small little steps, and then get to the big picture. Once you understand the small picture, the big picture is going to make perfect sense. And let's rock out. All right. So first, we're going over a buy candlestick, which is essentially their green. That basically means that the market is bullish. Understanding that, okay, before I even go deeper, the market can either do two things. It can either go up or it can go down. That basically saying that, hey, when the market is going up, that means we're buying. That's what we want to see. If we're saying, oh, the market is bullish, you might have heard stocks and they say, oh, the market, it's hitting all-time highs, it's bullish. Oh my gosh. That means the market is going up. When bulls hit people, it's the easiest way to remember it. When bulls hit people, they hit them in the sky. If you watch any bull video, they're going to hit people up. When people get thrown in the air, just remember that the market is going up. Now, the opposite. So to everything, there is an opposite. So if there's a buy, that means there's a sell. So that means if we expect the market to go down, that means it is a sell. We'll see red candles, or depending, the color doesn't necessarily matter because people change to how they like it. But essentially what we're going to equate red to is to going down, decreasing in value. So far, are we good with that? We know that the market can do two things. It's either going to go up or it's going to go down. And if we see that it's going up, that is considered bullish. That means we want to look to buy. Or if we see it's bearish, which means it's going down. Bears crawl on all fours. When they hit people, they hit them down. That means it is going down. That means selling. Oh, the stock market is falling, it's bearish, it's not looking good. All these things are dropping, it's not looking good. Oh man, that means it's a sell. In the foreign exchange market, you're able to make money whether the market goes up or it goes down. So far, do we understand the difference between, or we understand that the market can buy and it can sell? We can make money on both sides. Just put a 1 in the chat or just let me know that you're rocking with me so far. I'm going to go even more in depth and break down the individual candles. And that's how you're going to understand an even deeper meaning. So whenever you look at a chart, it'll make sense. All right, so we got a thumbs up. We got a thumbs up. What about on Zoom? We good? We good? How are we feeling? All right, perfect, perfect, perfect. And if we're lost, just let me know. So now you've probably seen things, you probably looked at a chart and we're very confused, had no idea what is going on. So this, what you see on a chart 9 times out of 10 is you're seeing candles. All right, perfect. We got 2 thumbs up. I'm with it. You're seeing candlesticks. That's what they're called. They're basically telling you the history of the market. You're able to see exactly what the market is doing, what it did in the past because of these candlesticks. That's what's telling you, that's a story of the market, the easiest way to put it. The colors is also telling you, it makes it easier for you to understand the data on what is going on. So if we see a lot of green candles, that means we're seeing a lot of buy. Green, you think green money. If you see a lot of green, that means value is increasing, there's more money. If you see a lot of red, that means there's a lot of decrease and a lot of sellers are in the market. So the market is going down if you see a lot more red candles. If you look right here, you'll see this is a box. We'll see bullish green period. And this is where it's important for you to understand what is the anatomy of a candlestick. So what does a candlestick look like? How does it work? And to the right here, we see different words: high, close, open, low. What that means is the candlestick starts here. I think the easiest way I can do it for the people who can't see, I'll do this. So if this is a candlestick, we're going to go with this. Boom. We're going to go to candlestick. We're not going to use that. We're going to use this. For those of y'all that can't see, candlestick, it's a box. So you'll see a lot of boxes on the screen. We have the open, which is at the bottom, which is here. This is the open, because if we remember that the market wants to go up, let's just say we're buying, looking at a bullish candlestick, the market is going to go up. So when we look at a candle, it'll start here. And the reason why I'm saying here is because this is a clear differentiation. I might have just made that word up, but I don't care. We have the open right here. And this is telling us where it starts. Now at the open, there's a time frame that is linked to the candles. So for instance, when you go to a chart and you're going to see it, it's going to make perfect sense. There's charts where every 1 minute a new candle will be formed. So what that means is that at 6:44, another candle will form. So right here, we have an open, and within the minute that the market is moving, the chart has a timer and all, and it'll make perfect sense once we see it. Then we see the market, from the open, it went up. That's what determines whether that candle will be green or if it will be red. So we see open and close. That means the market opened down here, and by the end of that minute, the market went all the way up to here where it says close. That's why the candle is green. Now, if the market were to go the opposite way, which we see how it says open and then it has a low, this is called a wick. If I'm moving too fast, let me know. I'll slow it down. But this is called a wick. Wicks are basically telling you where did the market go but not want to stay. Same way as up here, just as above, so below. We see up here, the market opened. The market went up, It went above all the way to the high. And we see how the market came up here, but it didn't want to stay. How are we able to know the difference between whether the market wants to stay or whether it doesn't? This is something called a body. The body of a candle is what is telling us the story. This area is the body. So for those of y'all that are watching on here, we see here, boom, we have the market open here. This is a buy candle that we're going over. We see the market came up, the black is the wick, and the black is the wick on the bottom. That's how we're able to make it to see, I guess is the perfect example. So the body of the candle is this. That way, we see the black on the top and the bottom are wicks. We see the market came up here, but it didn't want to stay. And it came lower, but it didn't want to stay. So now we're able to tell that the black at the top is the high of the candle, the wick. The close is right here because by the end of that time frame of that 1 minute, this is where the market ended. This just happened to be where it was. We see at the bottom the open. So at the start of the minute, so at 6:45, a new candle was formed and it started here. As it was there, it went down, so it sold a little bit. So the candle was red. And then as time went, we see price went up, went to a high, came down a little bit and closed here by the end of that minute. Do we understand a little bit what a candle is? Pretty much so far. If we're confused, let me know. But if we kind of understand what a bullish candle is, let me know. If I'm hoping I'm explaining it pretty well. All right. Let me know. All right. All right. We got more people joining the Zoom. All right, y'all. Hopefully y'all got it up there. We got it down here. So perfect. All right. Now, just like how I said, as above, so below, or the opposite, we have a sell candle. A sell candle is honestly the same as similar to a buy candle, but it's just the opposite. So now, instead of us seeing a lot of green, we're going to see a lot of red. So look, now we have boom, instead of the open being at the bottom, the open is at the top. So now we're starting our trade, or we're not starting our trade, but the candle is opening right here. Right here. And then what is it doing? It decides to go down. Because what is this? It's a sell candle. It's not looking to buy. I mean, it can for a little bit, but overall it's gonna sell. So we're seeing red, which means we got to remember it's going down. Open is here. When it opened, we see price went up to the high. So we thought it was going to go up, but as time went, it came back down. So it turned from green because it was above the open. Then it went back down below the open. That's where the candle turned. That's where the candle starts to turn red. And then we see the low that it made, which basically is saying, hey, it's low. This is as low as it came. But remember, it wicked. Price is showing us where it doesn't want to go when there's a wick. So what did that tell us? Hey, all right, that's a bet. It didn't want to go there. So as the minute came to close, it came back up to where it says close. So it opened here, came up here, but it didn't want to stay, which is why it's just a wick. Then the body started to be formed because it was selling. And then we see we have a low. And then what is it? Another wick was made, which brought it all the way to the close. So far, do we see what is a sell candle? If we see what a sell candle is and it makes sense, could I get a thumbs up, something in the chat, just so I know that we're on the same vibes? Okay, let's see. All right, all right, all right. We're moving, we're moving, we're moving. All right, perfect, perfect, perfect. So for those of y'all, that we went over so far, we went over a buy, we went over a sell, and now we're about to go over trends. So for those of y'all that are on Instagram Live, I'm explaining it on both. So I want y'all to understand. So stick with me. And I'm explaining this as the best as I can because I want everybody to understand what's going on. So now, how I was saying the market could either buy, it could either sell. And there's actually a third thing that it can do, but it's either buying or selling regardless, no matter what. But as the overall picture, this is how we're able to determine basically what's going on in the market. Is it on an uptrend, which basically means there's a lot of buying? That means everybody is saying, oh, it's going up, so we're buying. It's like when Bitcoin ended up going on it was just shooting up. Everybody thought, oh, it couldn't go down. That is where that's called an uptrend. It's bullish. We're expecting it to continue to go up. So an uptrend is simple. We're seeing different highs. They're called higher highs and swing lows and swing highs, swing lows and swing highs. All that is telling us is, hey, price is going up. Price has to make something called an impulse, which is what we see here, where it says swing high, and then it has to make a swing low, where it takes a break. So you want to think of it as the market is taking a break. So the market shoots one direction, and then it decides, you know what? I'm going to take a break and I'm going to go the opposite way because I've already shot up in that direction. So what that's telling me is, hey, I'm expecting price to continue to go up, but I don't want to get in at a high because when you go get in at a high, you're already cutting yourself. That's what most people do. Remember, most people fail at trading. So if we're doing what everybody's doing, we're automatically going to be behind. So we have to understand is when we see a high made, so when Bitcoin makes a high or anything, it makes a high, we don't want to be so quick to jump in. We want to wait till price comes back to a swing low, and then we get in at this position. High and low in the market is relative to where price is. We say buy low, sell high, which is true. But a couple years ago in 2018, I think it was 2018, but a couple years ago when Bitcoin was at 20,000, that was considered high. So let's think about it. A lot of things are considered high at the time, but now if Bitcoin was at 20,000, we'd say that's kind of low. So you have to understand that it's all just relative to price, but you really need to focus and know where price is, which will help you determine on whether price is high or whether it's low. So here we see a swing high and then we have a swing low. So that all price did is make an impulse up and made a retracement, which is what it's called when the market takes the break. All that means is the market went in a direction and then it took a break, which is the retracement. And then the continuation is the move that we want to catch, which is the bigger move. That means the market has taken its break. It's all right. It's relaxed. It's got what it needed to do. And then it's going to shoot in the direction that it wanted to go to already. That's why you see from this swing low to this swing high, this is way bigger than this. So understand, we're not getting in at swing highs. We're getting in at swing lows because we want to catch the most amount of profits. And I wouldn't necessarily say the shortest amount of time, but we'd most definitely rather be in a winning position rather than it going in our favor and not, and us be wrong most of the time, and then we're right. You'd rather be right from the jump. You rather know when you're right early or know when you're wrong early. So regardless, you know whether you're right or wrong pretty quick. So do we understand so far kind of what is the purpose of an uptrend? We know that, hey, an uptrend is the market is buying. We want to get in at, actually, I'm not even going to say where we want to get in at. If it makes sense, drop in the chat, where do you feel like we should buy at? If we're looking at this uptrend little diagram, where is the best place to buy? I want y'all to interact with me. For those of y'all that's on Instagram Live, you had to, if you want to get on the Zoom, hop on my story and you'll see the Zoom. Literally just join for free and you will see exactly where the link is. So if you're not sure whether it is, you could literally say, I honestly don't know. Or yeah, if you don't know, just say it. I'm here to help. low swing, catch it before it shoots up. Boom. Exactly. So Cam, let me know when it makes sense to you. I'm explaining it a little differently. So let's say, okay. So let's say we know it's at 0. Let's say we're expecting price to go up, and it does. And it does go up. Let's say it goes all the way to 10. Let's say we know that price is going to come back to 5 at some point in time. We don't know when, but it's going to come back to the number 5 at some point in time. So it goes to 12 and it starts to come down to 5. Now we know as an overall, the goal of the price is to reach 20. So price goes up to 10, comes down to 5, and goes to 20. You want to buy at 5 and ride price all the way to 20 because you know that the market has already taken its break, as we see from the swing high to the swing low. So the market went to 10, back to 5 to the swing low. It took its break. And then we see the swing high. Our target is 20. So you don't want to catch the move from just 0 to 10. You want to catch the big move, the move that's worth it, from 5 to 20 to 5 to even more than that, because we want to catch the overall trend. And when we catch the overall trend, that's how you're able to make the most money. A lot of people get stuck at the swing high because they think, oh, well, price just went up. It's going to continue to go up. That's one thing we always do, is we always think that price is going to always continue to go. We don't look at what's in front of us. So the question I have is, how can you determine the trend looking at the chart? So we're actually going to get into that. So on here, it's just lines to make it look simple. Because once you understand the lines, then you can literally go off of the candles and it'll make sense. Do you go off new candle or previous? So I'm gonna go over that. I check multiple time frames. The easy way to answer is you go through different time frames. Though you look at the bigger time frames, the daily, the 4-hour, the hour, to get the overall of what we're doing. That's the main thing, is you want to look at the bigger time frames for the trends. Because if you go to the 1 minute and you're at those lower time frames, you're going to get lost in the sauce and you're not going to be able to understand and really stay focused on what's the bigger picture, what's going on. So I'm gonna go over, or Cam, does the uptrend make sense? Does the uptrend make sense now, at least? If it doesn't, let me know what you're confused on, because if you're confused on a specific thing, then I can tailor it to that. Because the downtrend is easy to explain because it's the opposite of an uptrend. Okay, processing was still getting it. Okay, perfect. Okay, so recap: uptrend, price is going up. We want to buy. That's what we're expecting, is price to go up to gain in value. If you see uptrend, you think uptrend, oh, I want to buy because price is going up. Now with the downtrend is the opposite. We want to sell. So in the foreign exchange market, you're able to buy and sell. That means is you buy if price is going up and sell if you're expecting price to go down. So if we're seeing price continue to go down, we see it makes a swing low, a swing high, a swing low again, a swing high, and another swing low. That means we're seeing price decline as an overall. So when we're looking at it, we're going to see that there is more red on the chart when we look at it. So when I go to an actual chart, it's going to all start to add and make sense. So when we're looking at it, price makes a swing low. And what happens is everybody wants to sell at the swing low because usually we catch the move too late. That's why we say it's okay. I didn't miss the move. I just got a tester. I got a teaser. It's showing me price wants to go down. So now all I'm waiting for is it to create a swing high. And there's strategies, there's things that I would learn and you teach as, mentorship and stuff where you find out how to find this. But you understand that a low is made and then a high is made, or a swing high. Then another low. So this would be called a lower low. And then this is a higher low. So you see how the lows, the higher low, lower low, higher low. It just continues. How I was talking about before, the impulse, which means the initial move down, then the retracement, which is the market taking a break. It says, hey, all right, I'm gonna vibe a little bit, take a break, it'll come back up. And then when it's ready, it's gonna do a continuation, which is gonna push price in the direction that it was going already. This is the move that we catch. This is where we make the most money. Then price, it'll do the same thing. It'll retrace, it will go up a little bit, it'll take a break, and then it'll end up shooting back down again. And the process continues. So when we go to a chart, you're going to see exactly what I'm talking about. It might look a little confusing because it's lines right now, but when you actually see it, we know what candles look like. We understand how they work, and I'm going to go over it again. So on a sell, you catch it at a higher low or a lower low. Which one do you think? You think for a sell, you catch it at the swing low or swing high? You tell me. I think honestly, I know you got it. And Cam, if you can answer too, I say take a guess. If I saw high. Okay. Cam, what's your take on it? And please don't think if I'd rather you give an answer and be wrong than to give nothing. Okay, so we got a high. All right. So we have a swing high. Cam, what you think? What you think? What you think? All right. Well, he'll put his. So we got the high. You're correct. The swing high is where you want to enter. And the reason why is because we want to catch this whole move. We want to catch the continuation on down. That's how you're able to catch it. And then consolidation is clear, or it's literally no clear trend. It's this right here. Oh, my bad. I'm paying attention. Oh, I got you. I got you. Appreciate you, bro. Now we have consolidation, where the market is literally just moving sideways. So here you could draw a line above and below, ceiling and a floor, and literally it just bounces back and forth. We're not trading that, and the reason why is because there's no clear direction. A lot of times is, in a perfect world, yes, we'd say, oh, we'll buy here, sell here. But in the charts, when you're trading, it doesn't necessarily work like that. You don't want to put yourself through extra mental capital, which basically means when you're in a trade, how are you thinking? What is your mind? Oh, am I scared to stay in this trade? Am I not? In that way, you just continue to not even worry about it. If you see the markets moving sideways, just tell yourself a move is getting ready to happen. So let me make sure I'm in position. So when it does happen, and I do see this impulse, how I was talking about this first impulse, or whether it goes down, I can get in and catch this swing high or the swing low or the move. Easiest thing about consolidation, if you're writing notes, is do not trade and market is moving sideways. So for those of y'all that are taking notes, so far we have three types of trends. We have an uptrend, which is literally consistent upward movement in the market. That means we're buying. We're looking for buys. We're not looking for sells. Even though there's a retracement and the market comes back a little bit, we're looking for buys. We want price to go up. And then we have downtrends, which is the opposite, consistent downward movement of the market. That means we're looking for sells. We're expecting whatever we're trading to decrease in value. That's where you get the term bearish market from. Bear is down. And then consolidation is literally just do not trade. We'll just look at it, sit back, relax, and that's all. So on a scale of 1 to 5, how good are we so far just with the trends? Actually, 0 out of 3. If you feel like you can explain all three trends, like, okay, uptrend, it's constantly moving up in your own words. 2, if you're like, okay, kind of, and 1, if you're completely lost. It all makes sense. Tic tac toe, 3 in a row. All right. Okay. Boom. All right. That's one. That's one. Yes. So you can, when you pay attention just a little bit, it makes sense. It makes sense. All right. Perfect. So now we're gonna go to support and resistance. Support and resistance are not necessarily exactly lines, but I feel like it's an easy way to explain it for you to be able to tell, okay, whether it's going up or down. So think of support. Think of us on a two-story house, or actually, you can say literally just a hotel. Uh, Imagine the hotel has the first floor, second floor, third floor, and whatever floor. If let's say the market is bullish, which means we're buying, where we're expecting it to go up. Let's say we're on the first floor. Let's say we're bouncing the basketball. Well, let's just say we have an imaginary basketball and we're bouncing it. And the ball, every time we bounce the ball, it comes back to our hand because the floor is supporting us. It's keeping it. Oh, someone else is joining. Let me add. Let them join. All right. So yeah, the floor is supporting it. It's supporting us. It's allowing it to bounce on the floor and come back up. Floor and come back up. So you want to remember that. So in the market, when price is at support, we buy. Price will we don't buy off of just straight lines and stuff like that. This is literally just the easy way on how you do it. As time goes, further in, I'm going to show you what actual support is and what it'll look like in the market. But here is a great example. Price is consolidating because we see price is moving sideways. Though if we were to buy, which we don't trade in consolidation, but in this case, relative to price, the perfect place to buy, since we bounced the basketball and it's coming right back up, is at support, which is the bottom, the floor. We bounce the ball off the floor. It is supporting, the floor is being supported. We're standing on the first floor. So the floor is supporting us. Now, let's say we go to the second, or actually, no, we're still on the first floor. Now, let's say we throw the ball at the roof and it bounces back down. When we throw the basketball at the roof, what does that do? The roof is resisting the ball. The ball, we're throwing it up, it is sending it back to us. So now that is considered the roof, or something called resistance. The ball is not staying up there, it's resisting the roof. So support, we bounce off of. We buy. We want to buy because we're expecting price to come there and support price, to hold it up. We don't want to see it go below it. We want to see it hold up. As you see right here, price is supporting. It's supporting price. It's supporting it. And then at the top, we see resistance, which is the roof, which is sending price down. It's rejecting price. It's making it, we're throwing the ball up, it is sending it back down. Throwing the ball up, it is sending it back down. So we understand that the roof is resistance and the floor is support. How are we so far with that? Do we understand? Support is the floor, resistance is the roof. We buy at support and we sell at resistance. Can we get that? Or can we get thumbs up or anything good so far? All right, all right. All right, perfect. So now let's look over here. Oh, perfect. All right, we got 2 thumbs up. Okay, so basically an easy, if you want to put it in words, point in the market where candles have a hard time passing. That's what support and resistance are. It's literally, that's what it is. It's a hard time for the market to pass that area. So as we see down here, if the market is bouncing off this area, we want to be like, oh, okay, the market's having a hard time here. So that means it's supporting price. And then we see up at the top for the roof, price is resisting. Here, how I was saying, this is what, not necessarily a chart, this is what a chart looks like. This isn't the colors, how I was saying, it varies, it's different. So we see how we have this line in the middle, and then we see how we have 2 boxes. So now I'm going to explain to you guys how you got to stick with me. You're either going to get it quick or I'm going to have to explain it a little differently. Actually, I got faith in y'all. Y'all got this. So support and resistance. Imagine how I said we're in the hotel. Imagine if we were to walk up some stairs to the 2nd floor. Now, from before, what was our resistance, which was our roof, is now our support. And now the 3rd floor is our resistance. So now that we walked up the stairs, And now on a new level, a new plane, that becomes our support because it's keeping us up. It's allowing us to stand up. We can bounce a ball, stand there, throw the ball at the roof, and it's going to resist the third floor. So now, what was before our resistance is now our support because all we did was go upstairs. We went to another level and we're able to stand up there. Does that make sense? Or do I need to explain it more? Because I might have explained it well, you get it. But if not, I can go even more in depth. So yeah, y'all let me know if that's making sense. Repeat that, please. All right, bet. Let me add someone else is joining. Okay, bet. So imagine okay, all right. So imagine we're at a hotel. We're at the first floor, walking around. We have a ball, and we're bouncing the ball. Simple. We're bouncing the ball, and the floor is supporting the ball. It's bouncing it. I'm throwing it down. It's coming back up. It's bouncing. So we know the floor can support the ball. Now, let's say I'm in the same hotel, same on the first floor, and I throw the ball up to the roof, and it's bouncing on the roof, coming back to me. What that is basically telling me, okay, is the roof is resisting the ball. Because when I throw it up, it comes back. It hits the roof and comes back. When I bounce the ball, the floor is being supported. So what that means is, all right, if I bounce the ball, it's going to come back up. It's going to support it. So essentially, I'm buying because at support, if the ball is bouncing up and when we buy, we expect price to go up, we want to buy at support. Resistance is the roof. If I throw the ball at the roof and it bounces down, then we're selling because we want to sell at resistance at the roof. We're expecting price to go down. The ball is coming down. So when we sell, we're expecting price to go down anyways. So resistance, sell. Resistance, sell. Resistance is the roof. If we throw something at the roof, it's going to come back down. Now, do we understand that so far? We're in a hotel. We bounce the ball. The floor is supporting us. We throw the ball at the roof. The roof is resisting the ball and is bouncing back down. So do we understand that so far? Oh, and Andrea, so basically, essentially, I'm kind of going over supply and demand. So people say support and resistance, supply and demand. It kind of goes over, it's a little bit of both. They relate. So boom, okay, that's good. We got that so far. Now, this is the second layer to it. Now, imagine us go from the first floor, we go up the elevator to the second. We step off the elevator. Now we're on a different floor. What our roof from before is now supporting us standing up. So now that second floor is now our support, and the floor above us is now our resistance. So you have to understand that now it's switched. Now, where we were at now on that second floor is now our support. It's now our base. That's what that pretty much is now. It is our base. And now the floor above is our resistance. So now, once price goes above there, so that's why when we're below it, we're on the first floor, that second floor is our roof. We throw the ball up there, it's our roof. It's coming down. We're selling. We're not, it's what we're looking at. We go up the elevator, we step off. Once we step off and we're on that plane, so once price goes above that second floor, now that is considered our support because now it is supporting us up. We're standing on there, we're bouncing the basketball on there. And we throw the ball to the roof above us to that third floor, that is our resistance. So now, from the first floor, our support and our resistance now has switched because when we get to the second floor, now it is our support. Yes, resistance is sell. Let me know if that makes sense. If that makes sense, that is kind of explaining support and resistance in a different light, looking at it as a hotel. Every floor you go on is now your new support, and the roof above is your resistance. So does that make sense? Does that make sense, everybody, so far? because that is very important. Okay, all right, we're getting thumbs up. Okay, bet. So far, we've gone over what is a candlestick, what is a buy, what is a sell candlestick, what is a higher high, higher low, swing high, swing lows, like looking at the chart, seeing an uptrend, seeing a downtrend, what is consolidation, and what is support or resistance. That's what we've gone over so far. So now what I'm going to do is I'm going to bring it all together. So what we're going to do is we're going to go to a chart and I'm going to show you what it looks like in real time. So now you're not getting just a one half. I missed the sell candlestick. Uh, if you actually want to, you can go to the link in my story and join the Zoom because this is pre-recorded. So I'm gonna save this and I have everything. So yeah, go to my story, click on the link, and then click join for free, and you're gonna see the link to join, the link to join. And that way you'll be able to hop on here and I don't mind going over stuff with you also. All right. So y'all, this is what an actual chart looks like once it decides to load. All right. Let's see. Taking this precious time. I can't see the Zoom. Okay. Yeah, okay. Go to my story, click on it. You should see join this link, or you can go to my bio. Yeah, either my story or go to my bio, click on the link, and then that way it'll show you my Patreon and it'll be there and click join for free. And you'll be able to see it. So just to recap, so you guys know that you know what you're talking about. The easiest way to tell if price is trending is look at price like this. If we look from left to right, is price going up or is it going down compared to where we're looking? I want y'all to put that in the comment. Is price going up or is it going down according to where we're looking at? And do not overthink. All you got to do is look at the overall picture. All right. Boom. We got it. Half the battle is done. Now, we have a low here. We have a high. We have a low. That was bad. Jawan, no, this is not I am. This is me. I told you. I'm the one. This is me. All me. Everything I'm teaching is me. It's just me. Ain't no I am. This is now it's me. It's one-on-one. It's well, I was always before, but now it's literally it's me. I'm teaching the stuff that I know, my sauce, my strategies, and stuff like that. So here, boom, we see the low, how we were talking about before, the swing low, the swing high, the swing low, and a swing high. This is exactly what we was looking at on the lines. But what this is telling us is, hey, boom, we see price was down here, made a low, and made a high. We don't want to get in at the high because we're expecting price to continue to go higher. So what happened? Price came down, it took its break, it took its it retraced, and then it made a continuation, which basically meant, oh, okay, price is going to continue to move in that direction. So far, do we see that this is an uptrend? That is clear that this is an uptrend. Do we see that it's a clear uptrend off of the notes that we've gone? I'm going to go over more examples. If you're confused, if it's clear, let me know. If it's not, let me know. All right, perfect. Yeah, I want to make sure that this is clear. Oh, okay, bet, perfect. We locked in. And then also to answer a question from earlier about the time frame. Okay, let's see. Okay. So do you guys remember how I was saying how candles, how when they open, there's a time frame and how they move? So this candle is a sell candle. So right here, we're on a 1 minute time frame. So that means every single minute, a new candle is going to come out. So what we're seeing is this is a live candle that is happening at this very moment. Right here is the time. So right now, Eastern time is 7:19. So that means in 3 seconds, another candle is going to appear. And now it's 7:20. So now another candle just opened. So now the open is right here. Boom, it's right here. Now, if the candle goes above the open, it will turn green. But if it stays below the open, it will turn red. So now you're seeing how within that minute, bodies are being made, which is what's telling us the story of the chart. Does that make sense so far? Is that making sense? Right now, we're seeing the story of the chart happening as it's happening. So we don't know whether it's going to end up by the end of the minute, if it's going to be you don't see the zoom. So you're gonna what you're gonna do is click on the link and then on the Patreon and click join for free. And then once you join for free, then you're gonna see my blog of where I posted the link. That's where it's gonna be at. So you'll go on the story or go to my page, and then you'll click join for free. And when you join for free, it'll give you access to my free content, and you'll be able to see that the link will be there. So now we see how in this case, the market is now going down. But we see that wick that it made right here. So now we're seeing all the different parts of a candlestick in action. And when now let's say we're on the 1 minute time frame. Now let's say I go to a 5 minute time frame. That means a candle will appear every 5 minutes. So right now it's 7:21. So in 3 minutes and 20 whatever seconds, another candle is going to appear. So the time frames tell a different story. So how you're trying to find out about the trends, you want to go to a higher time frame, like the hour, 4 hour, and daily, to find out these things. But that's how you see the bigger picture, over time. But what you want to get used to seeing is, hey, uh, uh, you're getting used to seeing, okay, what is price doing? So that was a quick side note. So now right here, I want y'all to tell me, is this an up or down trend? Do not overthink. And I want everybody to respond. If you can respond, if you can type, please do. All right, bearish down. Simple. All right, we rocking, we moving. Down. I like it. I like it. And just to make sure we understand, why is this a downtrend? We have a high. We have a low. We have a high. And we have a low. Or yeah, we'll say low because that's kind of close. We got a high. Here we have a low. And it continues. Now, I'm gonna put numbers up here. Where do you feel like is the best place to, I'm gonna put letters actually. Oh, never mind. I'm not gonna do that. Where do you feel like is the best place to buy? At the, let's do this right here, here, or actually my bad, to sell, because we're not buying right now. This is just selling. Especially because we are in a downtrend. So this is going to go from left to, we'll go left to right. Out of, this is 1, this is 2, this is 3, this is 4, this is 5, and this is 6. Which one do you feel like is the best place to sell from? Again, this is 1, this is 2, this is 3, this is 4, and this is 5, and this is 6. All right, we got a 3, we got a 1, one more person. 1 and 3. Exactly. If you said 1, you're right. You said 3, you're right. So y'all got it. Y'all understand. Y'all get it. Y'all are already 2 to make sure you break down doing the move. So you wouldn't sell here. The reason why is because let's say we sold right here. I'm gonna put a line because that's where we enter. Say we enter here, and then our entry was here. I'm gonna show you the difference on why it's important to wait. Because so the way how the market moves is called pips. They're called points in percentage. But you don't necessarily need to know what points in percentage means. That's what it means, so you do know. Pips, if you're taking notes, points in percentage. That is how you calculate how much money you're risking in the market. That's how you calculate everything. Now, also points. Pretty much, I'm going to talk about points. I'm going to say that. This, from here to here, is 3 points. It doesn't sound like a lot, but that can be the difference between $1,000, a couple $1,000, $1, $10, $2, $5, depending on how much you put on the trade. So y'all let me know. If you're in a trade, let's say you're going to take a trade. Would you rather get into the trade? Actually, put it this way. Let's say you put a parlay on a basketball team. And you like, all right, you studied everything, what you need to do, what you feel like, why this person is going to do it. Would you rather the team that you bet on to blow the other team out clear as day, so you didn't risk much money, but you made a lot? Or would you rather it be a close game all the way to the end? Yeah, would you rather it be, all right, it's a blowout the whole way, or would you rather it be a close game the whole way? Y'all let me know. Okay, blowout. Especially, let's say you put $100 on this parlay. You like, all right, it's gonna hit. I'm putting $100. Would you rather a blowout where you clearly won, or would you rather it's a close game? You might win, you might lose. It's very close. Y'all let me know. All right, we see a blowout. Exactly. If you get in here, that means you are leaving all this space. Yeah, guaranteed dubs. Exactly. I'm taking a blowout all day. You're giving it space for you to be in the negative. That means you're not winning the trade if you get in down here and price goes the opposite way. That's because we're expecting it to sell for it to continue to go down. But a lot of times we're not able to where we see it go the other way. We want to close our trade. We want to get out. No, to stop that, to not even get in that way, we want to get in up here where it's most likely in our favor to continue our way. And if we're wrong very small. The key to trading is not about, oh, how much money you make. No, it is not. People say that, oh yeah, you just make a bunch. No, it's about managing your risk. If you cannot manage your risk, you will never be a successful trader. That's why here, if I'm gonna risk, let's say, we're gonna say if it comes up here, we're closing, or we're gonna say we're gonna exit the trade. So let's just say we're wrong. When you're trading, you're gonna be wrong. One thing about trading is you will be wrong, but it's about making your losses small and making your wins large. Would you rather be in a trade, you're risking $100, be down $50, and then make $100, or would you rather not be down anything and make $150? Y'all let me know. Would you rather wait, be patient, and make the $150, or you get in early and you end up being down $50 And it does end up going in your way, but you may, you ended up just making 100. Exactly. We're gonna take the 150 all day. Trading is people say it's fast money. Yeah, it is faster than what you can do other places, but people don't add in that patient part. You might be waiting 30 minutes, an hour for the trade, but that hour that you just did is going to pay you more than what most jobs would pay, especially if you're trading with the right capital. Patience. You got to be patient. Understand patience is the key to everything. So just to recap what we went over so far is we went over the uptrend. I pulled up a chart. We're able to see what an uptrend looks like, how easy and simple it looks. We know what a downtrend looks like. We went over, okay, we know where on a downtrend we would even buy at. Well, I mean, my bad. On a downtrend, we would sell. We're not buying at uptrends at all. We're selling because we want to catch the whole move. We want to be able to make money by being in the flow of the market. If you've ever been in a rip current, you try to swim against the current back to shore, you're going to tire yourself out. Your body's not going to be able to handle it. Trading is psychological. It's a mental game. You have to be able to stay in it. So once you understand, you swim to the side. I'm gonna take the easier route, the more patient route. It might take me a little longer to get there, but I'll have more energy. I'm more sane, and I'm good. That's what this is. Patience. Does anybody have any questions so far? Do we understand what we've gone over? Does anybody have questions? People are hopping on and joining. So, does anybody have any questions so far? I feel like we're doing pretty good. Y'all are answering all the questions. Y'all are doing honestly great. So, does anybody have questions so far? I don't want to overload with information because I want to make sure that we at least understand what's going on. So, nobody has questions. Okay, so on a scale to 1 to 5, oh, is it too early to ask about stop loss and profit? It's not. Okay, so I'm glad you did ask. So actually, I'm gonna use this example. So since we understand where we want to get in the trade and where we don't, this is actually perfect. So I'm on tradingview.com. So I'm actually gonna send this link so y'all can check it out also. This is free. This is what I look at charts with. Let me just send it. Tradingview.com. So yeah, this is what I trade with. You can literally go on here and make a profile. It's free. And you don't really have to make a profile if you don't want to. But if you want, I suggest you make a profile. But if you do, let me know. I can send you over the link and to get it to specific to the sign up page, whatever. Now, stop loss and take profit. Stop loss is your safety net. That basically is telling you when price goes the opposite way, if price goes the opposite way. So let's say here, we're buying. No, we're selling. My bad. We're selling. Let's say for some reason, which you're going to see, I'll say I'm going to tell myself. I've done it before. I've been in sell. Oh, I'm going to catch this to here. I think it's going to go. And it doesn't. So what this does here is this is called a position tool. All it does is it just measures out what your trade is. So now how people are saying, oh, is this a lot of math I have to do? It is not. Everything is measured out for you. So understanding where we would get in this trade, we have our two positions. There's something called risk to reward. What we risk needs to be less than what our reward is. I'm going to ask everybody this. Would you rather risk $1 to make $1 or risk $1 to make $5? Oh, watch out. Let me know. I've never used TD Ameritrade. I think TradingView has an easier platform. It's a lot simpler and easier to use from what I've seen. So I'm gonna go with TradingView. I could be, that's just my preference. Trading View, I use another broker, but I do like how Trading View is when it trades. So, all right, so we'd rather make risk $1 to make $5. So let's look at it like this. Our entry was here. What a stop loss does is it's our safety net. So let's say for every pip, we're going to risk $1. And basically, what that means is every step the market goes, it will either add $1 or subtract $1. So just like, let's say we're walking on stairs. Let's say if we're doing $1 a pip, if I walk up 5 stairs, that means I've made $5. Let's say if I do $10 a pip, if I walk up 5 stairs, I've made $50. Let's say I do $100 a pip. If I go up 10 stairs, I made $1,000. That's why trading is so important that you understand the skill, because once you understand the skill, you do the exact same thing over and over. And the only thing that changes is the percentages. I did the same thing when I got funded on a 50K account, the same thing I did for a $400,000 account. It's all the same thing. A percentage, once you realize how important a percentage is, you're going to be so surprised and look at life so differently. And I know it sounds crazy, but I promise you, when you see the power of a percentage, you're going to look at things different. So let's look at it like this. Our stop loss is boom, it's 5. That's what it says, 5.4. We're going to say 5 to make it easy. We're going to risk $5. That means if price decides to go up all the way up here and continue to go up, we have lost our $5 and we're out of the trade. We're not losing more than $5. We're just losing that $5. Does everybody understand that? A stop loss is your safety net to protect your assets, protect your money. Let me get something in the chat if that makes sense. If we understand that a stop loss protects your money, it stops you from losing all your money in your trading account. Let me know. Talk to me. All right, we got a thumbs up. Perfect. Now, a take profit is the opposite of it. A stop loss stops you from losing all your money. But what a take profit does is it stops it once it hits a certain point and it takes you out with your money. So we'll see, just like how we see how price, a little too basic for me, but good vibes. Hey, no problem, bro. Yeah, this is just for the base. This for the people, for the basics. Appreciate you for stopping by. Um, then we see down here, boom. When price comes to your take profit, what that happens, or pretty much what that means is price will take you out of the market, secure your $5, and you ain't have to do a thing. You preset this before you start trading. It's simple. You got to make sure that you understand that your stop loss is planned out before you do anything. You know how much you're risking and you know how much you're making. So before you enter a trade, there's no type of scare of how much am I risking? How much am I going to make? How much am I going to lose? No, all of that is situated. It's already planned out. So what this right here is what you call a let me do okay, boom. Actually, first of all, before I get into this part, do you guys understand what a take profit is? Do we understand what that is? What it does, stop loss and a take profit. Do we understand? Stop loss saves you from losing all your money. It keeps it makes sure that if I'm risking $5, when price hits $5, if it goes the opposite way, I lost it. What the take profit does is if price does move in my direction, that $5, it'll take me out and secure it. That's the difference between a stop loss and a take profit. Now, what I'm going to show you is right here how our odds change drastically depending how patient we are in our placement of our trade. So we see here, let's say, I'm going to show you what 2 different entries look like. So we have our first entry right here. Let's say we wanted to go right here, and we see price ends up coming all the way down, and it taps it. So when we got into this trade, price went the opposite direction, about $2.50, half of whatever we put on. So let's say if we were risking $500, you are down 250. People's minds are going to go crazy. How long does it take to get a funded account and the percentage AT? I'll get to that. I'll get to that. Let's say, boom, half of our, so whatever we put on it, halfway, we're in the negative. We're seeing red. It does not look good. But it ends up going in our direction, which does work out. So we risked $5 to make $5. Easy, simple, easy terminology. Risk 5 to make 5. Now, when you're patient and you wait, we can literally cut that in half. Now you're able to risk 2.5 to make 8. So now instead of you risking 1-to-1, now I'm risking 2 to make $8, which to me that don't sound too bad. And what we'll see right here is we see how it says risk to reward. It says 1. Here it says 3.32. So that means for every dollar I risk, I'm gonna make 3. That to me, that doesn't sound bad. If I could go somewhere and I could risk $1 to make 3, I'm good. So that's the difference between you being patient and you not. Being patient can get you more value on your money, but when you're rushing and you're moving too fast, you lose value because you see the difference between we enter early rather than we wait and we be patient and we enter later. When price gets to down here, we're good. It hits our TP, take profit, it takes our profit, and we're out of the market. That's how you're able to make money while you're asleep. People wonder how you do it. Do I sit in front of the charts all day? I don't. Especially if it's like 3 o'clock in the morning and I'm trading. Nah, I'll set the trade, and I'm more than likely gonna fall asleep and wake up and pray that my take profit was hit. So do we understand what a take profit is and what a stop loss is? Do we understand that so far? Give me a thumbs up, a 1, 2 if you understand it, 2 if you don't. Let me know. I just want to make sure this makes sense for everybody. All right, and then to answer your question real quick, it honestly depends on the firm how long it takes. So for me, I used to get funded. So they had like a 5-day wait limit where it was either 5 or 3 days. So I used to be able to get funded within about like 2 weeks. When it was like a 3-day minimum, about 6 to maybe like a week or so. And then the percentages vary by the firm, but most of them are 80-20 profit split. So let's say you make $100 or not 100, but you make $1,000, you keep 80%, they get 20. So that's kind of like most of the profit splits. The highest I've seen is a 96% profit split. So there is firms that do have high profit splits, but it just also depends on the firm. So guys, we did go over a lot of information today. Does anybody have any questions for me? So this is like the Q&A time to open it up so I can get you guys. Does anybody have any questions? Do we feel like, okay, and on a scale to 1 to 10, how do you feel like you understand at least trading a little bit better? If you didn't know anything, how do you feel like you know it a little bit better? You can drop on a scale to 1 to 10 in the chat. Because I feel like y'all were understanding, y'all was getting it. I hope y'all was. Can you trade options and Forex stocks on the funded account? Yeah, so there's companies that have or they'll be considered futures. So if you're trading options, they would be called futures. That's what you would want to kind of look into. I know how to trade futures, but I'm still more on like the Forex side. I'm going to start getting into futures and stuff like that. but you can. There is prop firms that allow you to do that. So for those of y'all, hey y'all, thank y'all for hopping on. I wanted to do this free one. Um, yeah, my mentorship is started. This is the first full week. I have a couple people that's joining. I have an elite member that's joining, so they're going to be paying me. Usually, I charge 2,500 for stuff like this, like to sit down, break things down as much and deeply. Um, I got no. Thank you. Hey, thank you so much. Bless. Hey, God gonna bless you too. But I love to give free information away. So if you do want to learn how to trade from me specifically, like strategy, in depth, one on ones and stuff, just check out the Patreon. How you found the link? As I said, usually I charge 2,500, but I want to make it so everybody can do it. Everybody's gonna be actually engaged in learning and help each other. So I'd say if you're able to put money aside, make it an effort. Choose the first tier, the $100 a month, and that way you're in. We be on the calls, shadowing everything. I can break down, have one-on-ones with you. But if you really want to take it serious, check out the Patreon where you found this because I'm gonna continue to over deliver. I'm gonna give you more, and more because that's just the type of person I am. I'm giving. So thank y'all for being on here. I really do. I'm glad. I thought I was just gonna have one person, but hey, I do appreciate y'all. Y'all have a blessed one. And I know God is gonna make sure that everybody who's supposed to be there, wherever they're supposed to be, is gonna work out. So hey, peace out, y'all.